Hello investors and future investors, welcome to the channel. In today's video, I will show you two trades that can give you consistent weekly revenue, and both of these trades can be used whether you're using a small or a big account. Today's video is going to feature options for small accounts and how you could use them to make weekly income. So if you're new to the channel, thanks for stopping by. On this channel, we help you with option strategies that can give you consistent revenue and everything related to finance and investments. And yes, you too can make money from your living room with options trading, and I'll show you how. And all I ask in return for this free content is an early thumbs up by you hitting the like button, and while you're down there, consider subscribing for more ways to win with options. Welcome to Investment Gains. Let's jump right into it. So for today's video, we're going to start off by using Microvision's ticker MVIS. Okay, so here we are on MVIS, and we're going to go into the trade MVIS option in order for us to open up the MVIS options chain. So now that we have the options chain open, what we're actually going to be doing, we're going to be selling covered calls. Now, in order for you to sell covered calls, you must first own 100 shares of the stock. I'm going to get into that in just a few, but for now let me show you how we're going to go about and sell covered calls in order to generate weekly revenue. So let's first make sure it says sell and call, and now we're going to choose the strike date closest to us. That's going to give us October 29th. Now we're going to look for a strike price that's currently above the share price, and we're going to look for a margin of profitability. So here we are. The current share price right now is $8.80. So we're going to choose a strike price from $9 all the way up. So for today, we're going to go with the 9.5 call. And the reason we're going to do that is because it gives us a 77.98 chance of profitability. Now, as you know, I like chance of profitability that's 75% or higher. So at the 9.5 call, that's just perfect. We're going to hit into this, and we're going to start our trade. Now we hit continue. We're going to choose the amount of contract. Let's just go with 1, and there you have it. So right away, once you sell this call, you're going to receive a $30 minimum credit into your buying power. Now that money is yours to keep no matter how this trade goes. So let's jump right into how you win this trade and how you don't so win this trade. So in order for you to win this trade, at expiration date on October 29th, you ideally want Microvisions to be trading at 9.5 or below. If that happens, then you get to keep your minimum credit of $30, and you get to employ the strategy for the following week or the following month. It all depends on when you want to trade. Now, the other way this trade could go, if once again on October 29th, Microvision is trading at 9.5 or higher, then now you're forced to sell your 100 shares at a 9.5 value. So it's going to be 9.5 multiplied by 100. So ideally, you're going to be getting $950 into your buying power, plus your initial $30, which you got from entering into the trade. Now, that's all good and well. Now, the best way for you to capitalize on this covered call strategy is to buy at a lower price. So let's say you're not familiar with options at all, and you decide to buy Microvision today. Let's say you buy it today at 8.8. Now, even if you did buy it at 8.8 and you put in this strategy to sell at 9.5, and the trade goes against you and you're forced to sell at 9.5, you make money from your minimum credit. You also make money from the amount you sold it at, which is 9.5, and you also get a stock appreciation. Now, the stock appreciation is going to be the difference between 8.8 and 9.5, and you multiply that by 100 shares, and that's going to be extra money that you're going to make as well. So this is one of those strategies that I call a win-win strategy. Now, the trick to getting into these strategies is to take the small wins. Now, the small wins of this, once you do a trade, you have to wait 5 days in order to make $30. Now, $30 to most people does not look like a lot, but $30 compounded 4 times for the month, that's going to give you $120. So always keep your eyes open for the big picture. Also, your return on investments. Let's say you were to purchase 100 shares of MVIS at 8.5, and you keep getting an average of $30 on a weekly basis. That's a return on your investment of about 3%. A return on investment of 3% is extremely good in the options world, especially when you're looking for consistency in generating weekly income. Now, let's jump into the second stock. Hopefully you guys enjoyed that. All right, so the second stock in order for us to use with our small account in order to make weekly revenue is gonna be Fuel Cell, ticker FCEL. Okay, so here we are on the Fuel Cell options chain, and once again we're going to go to sell and call, and we're going to choose the closest strike date to us. Now the reason why we're choosing the closest strike date to us, because with this option strategy we want theta to work on our side. Now theta has to do with time. If you're not familiar with the option Greeks, I will link a video to the top in order to help you better understand this strategy. So once again, we're going to choose our strike price above the current share price. Now, as you can see, the current share price here is 7.3. So we're going to choose our strike price above, and we're going to go with the, let's see, the $8 call. Now, once again, the reason I'm going with the $8 call is that my chance of profitability is going to be higher than 75%. So we're going to go ahead, we're going to click into that. We're going to hit continue, and now we're going to choose the amount of contracts we want, which is 1, and voila. So once again, right away, once you do this option strategy, you will receive a minimum credit of $21 into your buying power. Once again, that money is yours to keep no matter how this trade goes. Now I'm not going to go into detail like I did in the previous one, but I will just do a continuation because now you know the trade could go in either of two ways. So in order for continuity, let's say you receive $30 for the first one, and now you're receiving $21 for the second one. That's going to give you an average of about $50 per week on just 2 stocks. Now, $50 multiplied by 4 times a month, that's going to give you $200 return on investment. Now, in order for you to do covered calls, like I said earlier, you must own the stock outright. Okay, so let's say you bought Fuel Cell at $7. Now, once again, these are just examples. Let's say you bought it at $7 and you did buy MVIS at $8.80. So $880 plus $700, that's going to give you around $1,580. So in actuality, what you're doing is that you're spending around $1,500 in order to control 200 shares of 2 different stocks, which is going to give you a weekly return of around $50 a week, which gives you an average return of $200 a month. Now, like I said earlier, most people do not want to get into these strategies because the return is only $20, but do not look at the dollar value. Look at your ROI, or your return on investment, and that's going to tell you whether you enter into a good trade or not. Now, on this channel, we have lots more strategies like this. So if you want to join the weekly income team, like and subscribe right now. Also, hit the notification bell to get an alert whenever I post a video. And most importantly, if there's someone out there you think that can benefit from this video, please feel free to share it with them. Thanks for watching, and remember, always keep pushing your investments.